Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Tuesday, the 11th of May. Starting off with Alton Gold, and here we've had a gap off support, near-term support near the 200-day moving average at £1.56. While we're above that, looking towards the top of that rising November trend channel as high as £2.50, perhaps as soon as the end of next month. Be cautious on the shares, maybe wait for an end-of-day close or a weekly close above £1.80, which was the initial May resistance, but otherwise we should have some decent flow given the gap to the upside that we've seen today. End-of-day close back below £1.56 and the 200-day line delaying or even cancelling the upside scenario. And if you're fussy, maybe you'd use today's intraday low at £1.62 as an end-of-day close stop loss. But with the gap there, looking encouraging on that particular stock. Stock which has also had a gap involved in the recent past is Abingdon Health, actually gap to the downside. Here what we are looking for though is an end of day close back above the floor of the gap at 60 pence. If we can get that, then it might be a sign that the shares are ready to fill the gap back towards 80 pence over the next 2 to 4 weeks, or the 2 to 4 weeks following any end of day close back above 60 pence. Encouraging moves there in the MACD window. Looks like we're just heading for a buy cross there, and we did have a key reversal to the upside yesterday, which tends to be a good sign of momentum starting to build in a formerly bombed out situation. No such doubts with the next stock, Cornish Metals, arguably the stock of the day here. Obviously, we've had the up move today, but the other reason for the excitement is the way that we've broken the initial range for the shares, 12 pence the initial range there, and that tends to be a significant event in the life of a new IPO or a stock that's new to the market. Let's say while we're above 12 pence, or at least if we get an end of day close above 12 pence, we're looking towards the top of the rising trend channel. Just obviously have to guess where that is, but that looks like it's up at 21 pence, and that could be seen as soon as the end of next month. This stage really back below the mid-April resistance there at 10 pence, really delaying the upside scenario. So it looks like we've got a nice saucer building on the Cornish Metals chart at the moment. Stock which I've covered quite a lot recently, but on a thin day, it might be worth looking at it again. Here with Corcel, we've broken that resistance line, the April resistance line there around, around the 2 pence level, and while we're above that, if we can get an end of day close above that, we're heading towards a notional target there up to 4 pence, which could be seen as soon as the end of next month, at least while the shares are above the 50-day line there, rising at 1.5 pence. One would be on the bullish tack for the stock, especially as 1.5 pence was formerly resistance both in January and then in March. Moving along to a stock which was highlighted by its CEO on the Sunday roast over the weekend, and great presentation if nothing else. Current situation is that we had a strong candle today after a rebound higher or above the 50-day moving average there at 31.7 pence. Also stayed above the floor of the rising trend channel from back in October. That's running around 30.5 pence, and while we're above 30.5, we're still on course, hopefully, for a move towards the top of that rising trend channel from the end of last year, as high as 50 pence. The time frame on that perhaps by the end of next month, giving it a bit of wiggle room in that respect. If you're cautious on the shares, it should probably be the case that an end of day close back above yesterday's high at 36 pence would start getting the momentum going and break the logjam that we've seen on the stock for several months in the recent past. On to one of today's risers, which normally would be rather boring, just covering a riser for sort of on a momentum basis. But here we've got a situation with Invinity that the shares have gapped up, and they've gapped up off support, which is normally a good sign. And while they maintain that gap, and especially if we can get an end of day close today above the 200-day moving average at £1.49, we could be heading towards the top of the rising trend channel from January as high as £2.50 as soon as the end of next month. If you are cautious, maybe wait for an end of day close above that last resistance last month at £1.59, but really anything above the 200-day line should be enough here, given that we've had the gap and the higher low for May versus April to date. Going on to an old favourite with the punters, Kodal, and Good to see that it's actually rising on what's a sort of rather miserable day for the stock market, especially the small cap area. Here we've hit a former target at 0.25 pence, the top of the rising trend channel from September. So that's one positive tick. And if we can get an end of day close above 0.25 pence today, which it looks like we might be able to manage, then the next level up would be that July 2019 resistance line projection, currently promising us a target as high as 0.35 pence. Perhaps as soon as the end of this month, but on a conservative basis, as soon as the end of next month. This stage only really back below that initial May peak there, 0.22, really delaying the upside scenario. But hopefully we are on our way, especially after yesterday's strong move and strong candle that we had there on the daily chart. Again, revisiting some of the old favorites of the recent past here. We've got MobilityOne. The point of interest here really is the way that new support at 20 pence has come in above old resistance at 19 pence. And while that remains the case, we're looking towards 30 pence as the target, perhaps as soon as the end of this month. So let's see how that particular situation pans out. Another stock which was mentioned on the Sunday roast, Oriole. Here we've got a situation where it was interesting from a technical perspective because we had several days bouncing for the stock, bouncing off the 200-day moving average, still rising at 0.68 pence. Obviously, we've had the rather horrific pullback from the peak in February at 1.94, so you can't say that the stock is overcooked. What will be interesting now is whether we can establish new support at 0.8 pence. That was the support area for March and going into April. And so an end of day close back above 0.8 would achieve a bear trap rebound for the stock, and then hopefully open up the prospect of a move at least back towards 1.1 or 1.2 pence, which was resistance on the way down. If you're cautious on the shares, even though we've broken that February resistance line at 0.75, you'd wait on an end of day close back above the 50-day moving average at 0.92, but obviously that would give away a decent chunk of the potential upside. Stock which I don't think I've ever covered before, actually. Coming up next, Rotala. Here we've got a break of resistance line, which has been in place since March. That was running at the 50-day moving average level at 31 pence, and basically above 31 pence we're looking for a move up towards the top of that rising trend channel from back in March last year. That's promising us a target as high as 57 pence by the end of next month, while we remain above 31 pence. If you are cautious, clearly you'd wait for a break of 36, 37 pence, which was March resistance, but looks as though the price action of the last few days is suggesting that we are finally on our way, especially after that last little bear trap rebound from below the 200-day moving average at 25 pence at the end of March. Finishing off with a stock which should be, probably will be, a post-pandemic recovery play. Here we've got Revolution Bars, and as we think of that event from next Monday, we'll probably get quite enthusiastic about the prospects for the stock. Here we're just toying with the old resistance from March at 35 pence. In fact, we've just broken it just now, but an end of day close above 35 pence could take the shares up to the top of that broadening triangle there from November as high as 90 pence, and maybe we'll see that by the end of July after a summer of drinking. At this stage, only really back below the 50-day line and 30 pence, really delaying the upside scenario. But this looks like a stock which has been anticipating a recovery and a post-pandemic recovery. Maybe it did that in November as well, only to be thwarted. But now looking very healthy indeed, with the steeply rising 50-day line and 200-day moving averages. That's it for me today. More updates tomorrow.